Ladies and gentlemen, welcome back. This is Christopher Aaron. It's May 29th, 2019. And as I was discussing last week, I want to provide an update on platinum and palladium. These are two other precious metals that we have discussed several times since February, and I wanted to show you what is happening in these markets and how I see things shaping up. And things have not played out exactly as I anticipated, but in certain ways, they have. So this is often what happens in the markets. You get part of something right, and the other part gives you a twist. So let's take a look here, because I still think that there is a significant opportunity setting up. And by the way, this is what we will be covering extensively in the new service, iGlobal Analytics, down here on the right. Just so you see, that's why we're calling that global as opposed to gold for the precious metals. Now, if there's one thing that I can say, I received a number of messages on this topic, on platinum and palladium, over the last few weeks, especially as platinum has been weaker than I anticipated it would be. But if there's one theme that I started to pick up on from all the messages I was receiving, it's that I do not think that the entirety of the original message was clear to some of you, because the original idea, remember, we're looking at a three-part chart right now. We're looking at the ratio. The original idea was a ratio. It was a spread trade, a platinum to palladium ratio spread trade, which means when we're looking back, and we're looking back at the upper portion here, this is the ratio, the platinum to palladium ratio from 1980 through the present, so almost 40 years worth of data. And we were looking at these lows here, this low that was set in 2001 and the low in 2019 just now at the exact same level. And we were calling this, therefore, a multi-decade support zone. In other words, where platinum is cheap relative to palladium. This was the key. And so we were looking at the last time here in the blue shading that this ratio happened, and we saw platinum prices here in the $500 range, and we had seen palladium here just hitting $1,100. And notice, over the next several years, we had something of a reversal, in other words, a collapse in the parabola of palladium and a parabolic advance in platinum, right? So excellent spread trade over the next 3 to 5 years. It didn't move directly in that manner. So we can see platinum was weak first, but palladium was weaker. And so the point is, we come back here to the present moment, and we were looking at several months ago, February 20th. If you remember, February 20th was the date that I published the initial video on the spread trade, and we were looking at platinum prices at $834. I'll show you the metric later. And we were looking at these palladium prices here that were above $1,450. Okay, so we can see now let's move ahead here. So if there's one thing I can say, is that from the messages that I was receiving, it seems as though the intention that I was attempting to convey here, that this was a spread trade, this was an opportunity to play the ratio, which means that one needs to both buy platinum and short palladium at the same time. It wasn't good enough to just buy one or short the other. We're looking at a ratio here. It seems that that message perhaps wasn't as clear as I intended it to be, because of the number of emails and things that I got from people who just said, hey, what's going on with platinum? And I responded to a number of individuals and said, hey, yeah, but also remember what's going on with palladium. So let's take a look, and I want to zoom in the ratio here into that red little box. So this is the ratio over just the last year. And remember, so we published right here, February 20th. This is where the ratio was. About a month later, we had that nice initial pop that I was expecting, and it's given back some of those gains. It looks like it wants to fill this gap here, to be honest with you. And I would look for that as a high probability here within the next several weeks, where that ratio is going to bottom at the lower part of this gap. This is often what happens when you see these initial breakaway gaps. It will fill, and then it will continue higher. So let's watch for that. The point is, we're still at this there are two data points here in the history, in the modern era of these metals, and we're at the second one right now. You can see what happened the first time. Okay, so this is just beginning. Looking at platinum, so the big points here we're updating, and platinum has fallen back farther than I thought it would. We'll zoom this in just a moment. We'll look at the short run, but I wanted to update just the big picture. So what we see in platinum is this is really indicative of the entire commodity space. And just as a side note, I would say this is the negative scenario for silver. If you're looking for an analogy of what silver could become from a technical basis over the next few years, it's that it could grind back down to its crash of 2008 lows, similar to what has happened to platinum here. And remember, for silver, we're talking about $8.70 or so. So that would be the negative scenario. We saw that happen with oil. We've seen that happen with platinum. Many of the industrial commodities are falling back to their crash of 2008 lows. And silver at the moment is seeing very little inflow as a safe haven or a precious monetary metal. I'm not saying that I agree with that. I'm just saying that's what the market is doing. And so let's pay attention to what the market is doing. So looking at the crash of 2008 lows as a major data point that we're coming back to. Now, this is a multi-decade support zone here. Let's bring up that key. The black horizontal support, this black level, look at that, going all the way back to 2003, right? The hit right here at 750, crash low at 750, just above that here at 800, 750, 775, and we're back down in that region now. The other key takeaway is that the long-term rising trend had been broken here in 2015. So this is not a market, even though I expect there to be good trading opportunities both higher and lower. This was the initial attempt that we had here. I do not think this is going to be a market that is going to recover these 2008 highs anytime soon. This should be a market that needs to work its way underneath the broken trend line here. This is often what will happen. You can see the retest of the trend here and then broken. I'm talking about the turquoise color. So markets will need to do that. This could be another 5 or 10 years that it needs to consolidate between, let's say, the upper 700s and the low 1200s. And I think there are going to be trading opportunities both ways, which is why I'm really excited about trading the commodities over the next several years. The other opportunity for individuals is going to be to accumulate platinum and some of these metals. But if you're going to be an accumulator, you have to be okay with the knowledge that you're probably not going to have a major trending move higher at any point in the next several years. If you're going to be an accumulator, you have to do so in this support zone here in the upper 700s, low 800s, and you have to be willing to sit on that for probably 5 or 10 years to be completely upfront. That's what I see developing here in platinum. So I'm looking at this as someone who likes to try to make profits over the intermediate term. I'm looking at this market as something that could be really nice in both ways. We see very clear resistance levels here, just above 1,000 and just at 1,200. This swing high here at 1,200 is going to be a key pivot level that I think will be respected for some years to come. So where are we now? There was a 6-year downtrend. We can see here by the magenta color, a couple of false breakout attempts here in 2018, and the legitimate breakout. Now let's go ahead and zoom this in. Let's take a look at this. So here was the downtrend break. Now remember, I published that first video on February 20th. So we were right in here. We were right before the downtrend break. And I said, guys, this is coming up. I can see how this is winding up. We were winding into this triangle shape. Remember that? Go back to the original video. And we, sure enough, broke out of that triangle. That's what I was expecting. Came back, retested, a bit of a false breakdown. This can happen. Sometimes we can't be so literal in the exact support level, but came back and retested. We had that surge higher. Now, here is what I was not expecting, because I thought that the surge higher after the retest of this 7-year downtrend break, I thought that the surge higher was going to take us just shy of this peak here from early 2018. I thought it was going to take us around $1,000 per ounce, and it did not. We got stopped here at right about 920, let's call it, and that is short of what I was expecting. So I am someone, when I am wrong, I am willing to admit it. I was wrong. Why? Well, it's not that it didn't move in the direction that I anticipated. It did, but it did not reach the target zone that I thought it was going to, okay? And so I admit that on this part, now keep in mind, this is one part of the trade, platinum we're talking about. On this part of the trade, it did not reach my target. Now, the other thing that I've realized here, and this is why it's challenging, if there's a lot going on for myself personally, professionally and travel-wise and otherwise, and I can do a video like this once a week, but I'm mostly focused on the monetary metals, and we're expanding into other commodities like this. But I can't produce a video on platinum every single week for free and post it up here. So we got into this period where we hit this line here, and notice this forms a nice sort of parallel type of initial recovery channel. Can you see this here in the blue? And excuse me, let me just go back. Can you see this in the blue, the parallel recovery channel? So markets often like to take sort of a visible shape in their attempt to recover. That said, I will admit this recovery, if this is going to hold here and we're retesting the long-term downtrend again, if this is going to hold, this is a weaker scenario than I anticipated. I thought this would be the retest. We would come back up here to 1,000 and maybe come back down to 850 or 900. It has not done that. And so this is an initial data point. And I think we have to remember this for platinum going forward for the next 5 or 7 years. If platinum is already acting weaker than we anticipated that it would on a major 7-year downtrend break, if it's already acting weaker, then I think we need to incorporate this knowledge into our trading plans over the next several years. Because I would say initial weakness on a huge downtrend break is foretelling that this market is still seeing a plethora of sellers show up on any attempt to recover. And I would suspect that that is going to be the case for the next several years. So we may have a market that does not do this kind of move that I was expecting, but can we imagine that it bounces in this recovery channel, plus or minus $150, and really does very little as a net sum over the next couple of years, but has these kinds of swings instead? Okay, so that's what I'm going to be looking for. The point is that even if we had a trade, this part of the trade that turned against us, we can learn from this. The other thing is that, so I opened the position, and I'll show you the stats in a moment. What was the number? I think it was $834 per ounce when we opened that right here on February 20th. I am not staying in a position if it turns negative against me. I'm not in here to take a loss. So we had the initial rise, and I would be out of this at the exact point that I got in here, several months later. I am not sticking around to see and hope that this recovers. So that was part of the limitation of creating these videos, is that I did not have the opportunity to be creating videos once per week on this. This is something that I can do, though, if I have a dedicated subscriber base, and we will be doing that going forward. So that is platinum. Weaker than it should be acting. I will say that. Did not meet my target. I fully admit that. And stopped out around even. If you can stop out around even on a trade, I think you're going to be okay if it turns against you. Now let's turn to the next part of this. Remember, and I think this is the key one, that a lot of people did not participate in the shorting of Palladium. Looking at the long-term Palladium, we're looking at this multi-decade consolidation, the breakout here in 2008, developing a parabolic move. a final target zone up here in the 1670 range to just slightly above 2000. But we're not really talking about the long-term target yet. We were talking about what was happening here over the intermediate term. And let's bring that up. And so remember, the trade was published here. The idea for the spread was published here on February 20th at this level. And here's what has happened since. Okay, so we had one short advance here, slightly above our level, and then something of a mini collapse and some consolidation happening. And mind you, look at where this is happening, right above. Let's see if we can zoom that back out. Let me go back one step here. Notice this trend line going all the way back from 2009, matching the crash lows, crash of 2008, early 2009, where everything crashed. And, you know, when you're looking at this going back here, it doesn't look that significant from where we are. Remember, Palladium crashed from $600 an ounce down to $150 in about 6 months. Okay, so this was a major crash. But you know, so the trend line that developed from this low, if you just draw a trend line from the absolute low, look at some of these initial hits on the trend over there, and then notice how this line, you just extend this line out. Yeah, the market took away, but you keep your line steady. And notice what happens, that these lows start to come in nicely again, and the market starts to respect this line again. Now, notice how we had the breakdown here, break below that line, respecting it from the bottom side, breaking above, and now let's zoom back in. Notice how it's respecting this line again from the upper side. You can even see the thrust above that line. So it's very interesting how markets like to respect given trends, you know, in waxing and waning types of periods throughout time. So let's give the trade update here. Remember, we're talking about long platinum, short palladium. Here's how this would have worked out from February 20th. Platinum was at $834 per ounce. Palladium was at $1462. May 16th was the date that it got back to that $834. Stopped out. You don't want to sit around and be underwater on something, so you stop out when you get back to your initial point, 834. That's good for a big zero. And the palladium side of it, as I said, which I think a lot of people did not follow through with the short palladium. They only did the long platinum, which is why it didn't work out. But remember, this was what we were talking about originally. That is good on the same date for a 9.4%. So if you think you had a 0 and a 9.4, average them together, that's a 4.7% unleveraged return. Of course, if you're using futures or options, totally different metric, because futures, you would have got it stopped out multiple times along the way. This is why generally I'm going to be trading these things unleveraged using the ETFs. This is the way that I like to do this. And then very short term, you can use some higher leverage with futures or options, but you really have to time that almost precisely exact, to the minute, to the hour. You can't be sticking around for a whole lot of wavering if you're using leveraged forms. So this is how this would have worked out in sum. And once again, just to bring it back, now there's a lot of people who are probably thinking, okay, so we've come back to the support zone. Where are we now? And I'll just say, if you missed this, or if you only did the platinum this time and not the palladium, which is the half of it that profited, I would say this is a time to get your brokerages in order, get your systems in order here, because if there's one message I can give is that this opportunity is not over. You know, look where we are right here in this blue shading. Okay, we're still right there at that bottom. I mean, fractionally above. We looked at that zoomed in earlier. But we're still right there for all practical purposes at that bottom. I think this spread trade is going to be a trade that sets up every 3 to 6 months for perhaps the next 5 years. And we're going to play it both ways as this ratio, if you follow my mouse, as this ratio works its way back towards some sort of sanity or long-term median average with respect to the relationship between these two precious metals. as substitution and jewelry in the auto industry comes in. I think there's going to be opportunities for this kind of thing in both ways. So just know, I don't think you've missed out, even if this was your first attempt at this. I think this is going to be setting up multiple times over the next few years. You just look at where we are here in Palladium as well. And, I think, could there be one more blow-off final top? Yes, there could. And in fact, I would expect there to be. But that said, then this thing should be a short for many years to come. So that is where we are. Let's learn from this. The takeaways are that platinum acting weaker than it should. So we'll use that knowledge to our advantage next time we see that gently sloping recovery channel on platinum. If it were to break that long-term support zone at 750, then Katie bar the door. All bets are off over the short run. The next support after that is not toward 600 or so, 550. And you would just want to step aside and let that thing play out before we have the next opportunity to get into platinum. So this is why I'm really, myself personally, I don't have a whole lot of interest in accumulating physical platinum at this point. I'll just say it off the bat. I would like to try to make 5 to 10% or so in a trade several times a year, and then have this be one of the things of multiple asset classes that I'm trading. So hopefully we can get, a dozen or half dozen of these trades a year or so, something of that order. So that is what this is all about, and I'm going to be doing this, and the new service is working its way to fruition. It's not going to be too much longer now. It's going to be called Global Market Intelligence, and I'm going to cover commodities such as this, platinum and palladium. We're also going to be covering copper. I think copper is setting up for a good trade within the next month or so to the long side, just to let you know. Bonds are going to be something that I'm going to want to short when this bond bubble finally bursts. And the stock market is as well, although I think that there is one more real mania setting up in stocks. I don't think it's quite over yet. So a lot of things happening here. And then, if you want to ask me about natural gas, well, natural gas is just hasn't moved anywhere for almost 20 years. So, that's something that might be able to be traded in a range-bound kind of move. Oil, I think, is moving lower over the next 1 or 2 years. So this is where I disagree with some of my colleagues. I think it's going to make a new low below that 2016 low. So stand out for that. Watch out for that. Anyway, this is all the stuff that we're going to be covering in the new service, because there really is a lot of interesting stuff happening with these commodities, especially if you really grasp the knowledge that as a net sum, the commodity indices are at 40-year lows. 42-year lows, actually, to be exact. And you don't get that kind of setup very often in your life, where something that can't go to zero is at 42-year lows. So I think huge opportunities setting up here across the spectrum as some of these things mean revert. Now, if you're more interested in gold and silver, just to let you know, the service that we do offer now is called Precious Metals Intelligence. You can find a link for that under the iGold Advisor brand. We cover gold, silver, the GDX, the GDXJ, the miners. We have members-only videos. Last week, there was a video like this covering gold, silver, the currencies, gold in Canadian dollars, gold in Australian dollars, gold in British pounds, gold in euros. A lot of important stuff in that last video. So you can find out more about that on the Precious Metals Intelligence link below. Last but certainly not least, thank you to all those people supporting these videos on Patreon. It means so much to me. Thank you once again. I hope there is some value that you can find in these videos as we talk about diverse commodities and currencies and things that are happening here in these markets. Make sure to hit subscribe if you're new to this. We'll be back to gold and silver next week.